my daily recap and my ramblings for today. I wanted to get 5 Tradify, 5 Take Profit Trader, 5 mffu. So I didn't have the coin to start those because I have this $1 mffu account that I claimed over the weekend, and I'm working on it, and I made like $500 today. So behind that $500, there is a lot. It happened. I was in a drawdown of $500, and then I got back to 500. So one of the takeaways for today's lesson is today's trading session is trading is 6 hours or 6.5 hours. So if you remove the last 1 hour or last half an hour, it's going to be about 6 hours. So sometimes I might be in a hurry to take a trade to get the answers quick. It's actually the opposite. I know that. That's the whole reason I started my own these videos, so that I can watch it on the weekend. So mainly I started today and I had a small drawdown. I made $100, and I was actually contemplating to whether or not should I be buying these new accounts, and is this time to start. But so far I'm happy. I'm following my rules mostly. The max drawdown is 500. Yes, I would have actually, if it had touched 600, I would have stopped for the day, guaranteed, for that account. And probably I would have done some simulation, trading view simulation, something. I mostly trade on simulation. So far I'm not uploading charts because there is no subscribers yet, and once I have some subscribers, somebody is interested to see how I trade, then I would definitely switch this content back to the chart mode. But today was very, very surprising. I knew buyers were in control. The eyes of retail traders, they call them buyers. They are in control, and they were taking the market up. Obviously my bullshit instinct comes into play, which is short. I wanted to not do that, but I will still do that because that's our instinct. Instincts are the one which definitely will be in play during the trading. But whereas you program a algo or something, they won't. They don't have emotions. All they follow is the protocols, the rules, in and out, high frequency trading. Yes, they don't have emotions. But as a trader who wants to trade full time, you can do that. But at the end, you need to live with the result that it gives you. So you're not the only one who can program. There are also people out there who they actually hire for, like I heard somebody, they pay $400 million just to program that simple scripts. So they are quant traders. Anyway, so where our excellence comes in is when you see some chart, you should be definitely neutral biased. I picked this line from one of the video that I watched recently. I really liked it when he said neutral bias. Our bias should be neutral bias. Our bias in politics should be neutral bias. Our bias in the whole world should be neutral biased. Our bias in the whole world should be neutral bias. Oh, sorry, I take that word back. I had some spam caller calling me. Sorry, our bias in the market should be neutral bias. So, and then I went with the same short instinct, and I just feel like when I see the green, and the main problem I have is I tend to think there is somebody who bought at the lows of the whole SPY or Qs, and he's sitting in a piles of cash. Somebody has to go there and get him out of the market or get his stops. Those are the things that goes through my mind. A lot of people who start when I started in the beginning, like 4, 5 years, 6 years ago, I don't have these things. But when I started to understand the market and slowly spending time in the markets, these are the things that are coming into my mind. Oh, there's some guy with his 401k or his mutual fund money or some Vanguard money. They are sitting with millions and millions of cash. There's got to be some force coming in and hitting the market hard, and so that they can take them out. Right? That's not how it works. It's actually the opposite. So this fund is created. I'll go into that, how the S&P fund, how it works. But it's still, I know the basics, I know everything about the fund, but still I go in there, I look for a short. That is my main problem. And today I did bring that into the game, and guess what? There was a big short was setting up. I was like, I don't believe in this short. These market makers will just crush the shorts. And I knew there's a market gapped up. They have to do the gap fill. Either they will do the gap fill or they will not do the gap fill. I knew that, and then they were not going to do the gap fill. They would keep going up. And then I was pissed off. I started taking these short setup, in and out. They're killing my stops. And I was pissed off. I had a drawdown of 500. And boom, there's a big short came up all of a sudden in no time. So then I slapped myself, not like with the hand. Theoretically, that's saying that I shouldn't look for a short. I should wait for the short. I shouldn't say that market, as I said, like I want to dictate my idea on the market. I will say, market, you got to do this now, and it doesn't work. So the idea is you just wait. So nobody will tell you. Oh, everybody will say, okay, just wait. But waiting for what? What are you going to wait for? That's exactly what we should be doing. We should be waiting for an unknown. So the day might be having a big green day or big red day. We should not force our opinions in the market right away. We should give. It's like a cooking, a baking, a cake or something. So when you start baking at the home, like a cake or something, you don't want to be really excited about the final product. You should take it time. Give it some time. Let the that oven heats itself, and you put in the ingredients and everything, and the cake comes out. So you should not rush. When the market is still setting up in the morning, you should let everybody come in. So what I understand the market is, there are people who does it for a job. It's their job. They don't do it for a something like a retail money. So they don't come in for like $1,000 a day. No, they come in for big money, and they actually doesn't get shaken out. I cannot, and that's actually right. I see that those people, they don't get shaken out. So they have big wide stops, and I'm definitely convinced that market has a big people with the big money who trades every day, who has wider stops. So think about these guys. So whoever is in the market, don't think that their stops is the one who actually is why market makers are there. No. If think about it, the market makers will never get to a point where their stops are so wide, and it's very hard to chase them. And by the time they chase them, they will be in a big loss. The market makers itself. So they don't do that. They will do it automatically. They should get the force. They should get some support. Then imagine like some guy who shows up and he wants to buy 1,000. The market makers will buy 2,000 ahead of him, hoping that he will raise his bid. And what they do, they slam the bid into him, and then they get out of their 1,000 or 2,000 contracts. So imagine, like, if they smell something, a new order coming in, they will do the opposite. They will buy ahead of him, and then they will reverse it, so that bid gets filled. So this is just a small game, I'm telling you. There's millions of games they play, but at the end again, the candles dictate the market. I was thinking I used to argue with the other people saying that, candles are not the way to go. Candles doesn't tell you anything. Candles are the waste of time. No. Candle is candle. I'm telling you, like, I cannot believe how good is a candle. I used to think only the order flow or the book map is the best. No. They are actually should be the last on your plate. You should be looking only at candles. I'm the one who just didn't look at the candles. I used line charts at some point. And Of course, line charts are also almost close to candles, but I don't look at like doji. Oh, doji candle, let's take the shot. No, not like that. You need to read the candles in a way that they are trying to tell you something. Just like a book, not a book like Harry Potter. I don't like the book anyway. So something like a good story, which actually like a science fiction or some mystery, thriller, suspense, how the story unfolds slowly. That's actually how you see the market. This is all like my own thinking, and actually I'm successful. But that's exactly my point. Like, I would bring in again the short mentality. I come in, I go, I see a green candle. The main thing was I used to follow this YouTuber. I don't know this. What's his name? I forgot his name. He's 20, not even 20 years old. He is the one who influenced me into the shorting. So why I am short-minded? Because when I didn't know anything about futures, when I didn't know anything about much of these markets, I used to just watch the YouTube videos how to do trading, this and that. And this guy would pop up. Oh my goodness, this guy would be heavily short biased, and as short as, think of it like a penny stock. And they know the penny stocks have fluff news, fluff company and everything. He will put a video saying that, oh, I'm shorting this one tomorrow, and I'm gonna get the it's gonna go down 20%. And but all the other comments in the YouTube saying that, oh, there are no some stocks to short. How did you find those stocks to trade? And he would never reply them. He would instead focused on signals. I heard like he was charging $1,400. He and his father. I forgot his name, but there were other videos came out too, claiming that he was charging $1,400 for his private membership, and it was nothing. Anyway, so he has some bad rap also on the YouTube. Anyway, so that's my point. Like, that was why my mind was always short, and I'm trying to get out of it. That's exactly I'm working on. Somehow I should be like as I said, like neutral biased. Anyway, so very good shot setup. I didn't believe in that, and it worked. So there could be people who was just watching candles. Why I'm telling you about candles is the reason why. You cannot take a trade based on a doji candle. I agree on that. But that doesn't mean a doji candle is not bad to start thinking about trading. So that idea of a doji candle turning into a big wave, think about a river. All the rivers start at you will not believe if I tell you, in a small, very tiny place. And that eventually turns into a river. So same thing, a doji candle or some of the series of these doji candles will start the idea of a big wave. So I don't know about this Elliott wave theory and all, but I definitely think the market is definitely like a river. It starts small with a bunch of doji candles or bunch of candles, very small. The idea is small, and then it lifts off. At the end, you'll be stunned to see, oh my goodness. I will be stunned to see, oh my goodness, why did I miss that? Yes, you missed that because at that point, the idea is small. Nvidia was a small company. AMD was a small company. Nobody believed in them. And now they are so big. Okay. Same thing with the Apple. They were a small company. They are not positioned, poised to grow as big as what they are looking at right now. But think about a big company. Imagine a mining company. They are already big. They won't grow much. They don't have the possibility to grow. Because the mining companies, they know, in order for them to grow, either they should be able to find a lot of mines or the places where they could mine, or there should be a scarcity of that particular metal or something, whatever they are pulling out of the ground. So whereas these companies, they are small, they can grow big. What we are trading, S&P, is 500 companies. Think about your day-to-day life. Something like I'm not even talking about the electronic side. I'm talking about toothpaste. Toothpaste is one company in the 500 companies. So that means, imagine like GMC, car manufacturing, healthcare, energy, everything, like biotech, Camtech, whatever it is. They are still like one of those 500 companies. And out of this, Nvidia is the one alone moving the S&P up or down. That's it. If Nvidia moves 1%, market goes 1%. Nvidia goes 5%, market goes 1% down. Why? Because market has the other options where they can justify themselves, saying that, oh, we have other companies who can post their best results, best profits. So anyway, so just my daily P&L for today would be like mostly like I saw the buyers were lifting it up, and I was like obviously short, and then I took some small hits. Would I stop? No, I would just go in, wait for the stop, and then eventually the short selling comes up, and what did I do? I just back out from that idea, and then the market sells off. So the moral is, I just don't just go in with the pre-notion saying that market has to go short or long. Just wait, let the market tell you all the ideas that I just told you about the cooking or baking or any of these river ideas that I said. Just wait, those small ideas turns into big. Sometimes I notice, oh, if I just let go for the first hour, well, what happens? Yeah, you can do that. That's actually very good. So this is also easy recommendation. You just wait for like first hour, let go, don't do anything. So that's probably why the guys in the West Coast have the best chances, I guess, because they wake up like 8:30, and by the time market is already traded for like 1 hour or 2 hours, and easy for them to understand the market. I'm guessing, maybe not. Maybe the East Coast people, I'm in the East Coast, so it's easy for me to understand the market. That's what I think too. So just let the market settle, and the bottom line is, you need to have them saying that, okay, we will buy from here to here, or we will sell from here to here. If you don't see either of those and you are doing the trading, you are definitely gambling. I don't like the word gambling, but I would say something else, something like you're just hoping. Yeah, you are just hoping or wishing. Those two will not be able to see success in the trading world. The idea is, if you're trading something, you need to know exactly where it will go or it will not go. Yeah, that's my daily recap for today. It's too long, I know, but it's just that I start to vent out all these things, and I will listen to myself. Maybe I will try not to do it.